Good morning and welcome to the Pennsylvania Department of Banking and Securities Midweek Money Matters webinar series. This morning we're going to be talking about reverse mortgages and the things that borrowers need to be aware of. Thank you so much for joining us today, and just so that you're aware, we are recording today's session. We ask that you hold any questions that you may have until the end of the session once we've stopped today's recording. So without further ado, let's go ahead and get started. This morning, we're going to be talking about really what is a reverse mortgage, because in my 17 years of working with the department, reverse mortgages seem to be the most confusing topic that I've ever had to talk about. So we're going to really dive deep into what exactly a reverse mortgage is. Then we're going to talk about the things that we need to consider when we are thinking about potentially getting a reverse mortgage of our own. And finally, we'll wrap it up with talking about what happens when the final borrower vacates the property permanently. So a reverse mortgage is this sort of special kind of loan that allows older adults, age 62 or older, to be able to use the equity in their home in order to make ends meet. Now, there are 4 different types of reverse mortgages that we're going to mention today. We have the traditional reverse mortgage, which is a HUD insured home equity conversion mortgage. That's basically the run of the mill reverse mortgage that you see advertised on TV. Another type of reverse mortgages is a reverse mortgage that's used to purchase a new property. The drawback with a for purchase reverse mortgage is that you have to have cash in order to supplement what you're able to borrow using the reverse mortgage. So that becomes a little bit more of money that you have to have at closing. There's also the single purpose reverse mortgage, and that's the type of reverse mortgage that can simply be used to pay off existing debt on an already existing property. So if I am 75 and maybe I still owe $25,000 or $30,000 on my mortgage, and I want to save the money by not having to make a payment on my property, I can do a single purpose to pay off that loan, and then I don't have to worry about making a mortgage payment until the loan becomes due when I permanently vacate the property. The 4th type of reverse mortgage that I want to mention today is called a proprietary reverse mortgage. A proprietary reverse mortgage is a reverse mortgage that is not insured under Housing and Urban Development, or HUD. So you don't have the same types of protections that you would have if you had the HUD insured reverse mortgage. The benefit to proprietary reverse mortgage is that you may be able to access more equity, more value from your property than you may be able to have in the HUD insured reverse mortgage, because HUD has some maximum amounts that you can borrow, and that changes from year to year. But it's at this the last I looked, it was for you couldn't borrow more than something like $625,000 on a property. So if you're in a situation where your home is worth more than that and you need access to more than the $625,000, then a proprietary reverse mortgage may be appropriate. But the thing that you have to keep in mind is, with a traditional reverse mortgage, the for purchase and the single purpose, those are all insured by HUD. So if the mortgage company that you have your reverse mortgage with would happen to go out of business, with the HUD insured, HUD takes over the contract. so that you can continue to keep the mortgage contract that you had originally. So that would make sure that you continue to have access to the line of credit or to the monthly payment that you had contractually signed up for when you took on the reverse mortgage. So those proprietary reverse mortgages don't have those same assurances, but under the right circumstances, they can be appropriate. So it's just important to understand the different types of reverse mortgages that are available, and then also to make sure that you're getting into the appropriate product for you if you find that the reverse mortgage is the way you want to go. So, with most reverse mortgages, anything that comes under that HUD insurance, you have to be at least 62 years old. At least one of the borrowers does. It used to be that both borrowers had to be 62, but that rule has changed. You also have to have significant equity or own the property outright with no mortgage. Because of the way the formula works, if you don't own the property outright, you have to have enough equity that you can pay off any existing mortgage. But one of the things that I think is really great is that with the HUD insured reverse mortgage, you must participate in reverse mortgage counseling. And reverse mortgage counseling, I think, is a great requirement because the counselor sits down and helps you to understand exactly what you're getting into. And one of the things that I have heard over the years is that borrowers don't always understand exactly what they're getting into. So that that reverse mortgage counseling becomes really important. You also can't have any federal debt, so you can't owe back taxes or student loans. And you have to continue to make your regular payments on your property. So you have to maintain the property, you have to pay the taxes, and you have to keep it insured. If you don't do any of those three things, the reverse mortgage company actually has the ability to go in and foreclose on the property. So it is really important that we understand that requirement. And I will make sure I actually mention this a few times because it really is that critical. But we need to understand that reverse mortgages are not always appropriate for everyone. They are more expensive than a traditional mortgage. And when I say more expensive, with the HUD insured reverse mortgage, one of the fees that you're looking at is a percentage of the total value of your property up front. So it had been something like 2%. So that 2% of the value of your property goes right into your principal that you start out with your reverse mortgage. Now, the main difference between a reverse mortgage and a traditional mortgage is that with a traditional mortgage, you're going to make payments every month and your principal balance is going to go down every single month a little bit. With a reverse mortgage, the opposite is what happens. So every month, instead of you making a mortgage payment, the interest is going to be tacked on to your principal. So at the same rate that when you think about it, as you're paying down your mortgage, you're getting more equity. As you have this reverse mortgage, the opposite is happening. You're not making payments, so the principal amount is growing every single month, little by little. And that's the easiest way for me to be able to explain it. As I said, you still have to continue to pay your taxes and other normal fees. You have to keep the property maintained, you have to keep gas, electric, all of those things. And I think it's important that I mention that TV commercials are so incredibly misleading. We see very famous people who talk about the great things that reverse mortgages have allowed them to do. And the reality is that yes, you can do all those great fun things, but it's going to cost you more money and if you use all of the equity up front with paying for the cruises and the lifestyle, what happens in 10 years when you suddenly have to put a new roof on your property and you don't have equity in your reverse mortgage and you don't have that kind of cash on hand? It can become a big problem. And the final thing that I like to mention as far as not being appropriate, it's important that we understand that the people that you love and care about may not be able to inherit your home. Because when you permanently vacate, when you pass away, or you move into a nursing home and you're not going to come back, the reverse mortgage balance is due. And the contract typically allows for about 6 months for whomever is handling the property or the estate to be able to pay that off. So if your family members want to pay off the loan, they can. They have to have the means to be able to do that, whether they have cash on hand, whether you have cash on hand that you want to gift to them, or whether they take out a traditional loan in order to pay off the reverse mortgage. But it's important to know, if your family is expecting to inherit your home, you need to have that conversation so that they are aware that you have the reverse mortgage and they're going to need to pay it off. So I think it's really important that we have those conversations. So I mentioned reverse mortgage counseling. Reverse mortgage counseling can take place over the phone or in person. While we're in the middle of a pandemic, I still genuinely believe that if you can do a reverse mortgage counseling session in person, it's better. And that's only because the reality is a reverse mortgage is an overwhelming, daunting product. Having that face-to-face connection with your counselor can help to ensure that you genuinely understand exactly what you're getting into. The reverse mortgage counseling is typically paid out of pocket, and it runs somewhere between $250 and $300. Now, there are grants available through HUD if you are in a financial situation where you don't have the money to be able to pay that. But I always suggest that we take someone that we trust, because there's a lot of information going to be thrown at you. And while it's very important that you ask all the questions, having someone else with a second set of ears can be very helpful to make sure that we remember everything that's been said. And then I also think it's important to take notes, because that is how we can go back and look at what we've thought, look at what we heard, and be able to make that educated decision. Because again, a reverse mortgage is an important decision that may or may not be right for different consumers, and it really is very dependent upon your individual circumstance. So I think it's really important taking someone that you trust and keeping those notes. Now, once you've finished with that session, you should be able to go home, think about it, review those notes, talk it through, and then you should be in a position where you can make that educated choice as to whether or not a reverse mortgage is right for you. And sometimes the answer is not right now. Maybe you decide at the end of the day to wait a few more years. And there are advantages to that we can talk about in a little bit. If you decide to move forward, you'll be ready to actually find that HUD approved reverse mortgage lender, and your reverse mortgage counselor should be able to provide you with that. And if they don't, at the end of today's PowerPoint, I have a list of those resources. So I'm happy to send those out to anyone who may want them. Okay, so I mentioned that reverse mortgages are more expensive than traditional mortgages. And I just think it's important to kind of outline those expenses. So we've got that home equity conversion mortgage insurance premium. That's the insurance that gets paid to HUD to help ensure that our mortgage is insured under HUD. Now, the HUD insurance ensures that if my reverse mortgage company is to send me $500 a month for the rest of my life. If they go out of business, HUD is going to take over and continue to make those payments to me. If by chance I outlive the value of my property, let's say my property is worth $150,000, and when I pass, my reverse mortgage is $200,000. When my estate sells my property, they can sell it for the value of the home, or your estate can purchase it for the value of that $150,000. And that HUD insurance is going to pay the difference. That's where that insurance premium comes into play. So it's the last I looked, again, it was about 2% of the value of your property. So if you've got a property that's valued at $100,000, it's $2,000 that's going to get added into your initial principal. Along with that are the origination fees. Those are the fees that are going to be paid to your mortgage professional who's helping you with the reverse mortgage. Those are fees that are going to be paid to the lender themselves, and some of those other fees. Those origination fees are basically the exact types of fees that you would be paying on a traditional mortgage. A servicing fee is permitted by law to be charged, but I've not seen any reverse mortgage that actually charges a monthly servicing fee, but they can. So they can add in at the original settlement the fees that they anticipate they will collect through the lifetime of that loan. And the information about servicing fees is laid out in black and white in your contract. It's very important that you read that contract thoroughly. And at closing, there's a lot of information that's getting thrown at consumers. What's fantastic about a traditional reverse mortgage is that after you've had closing, you have 3 days from the time you sign those loan papers. You have 3 days to review the contracts thoroughly to make sure that you're comfortable with everything that's in there. And if you decide that the terms of the loan are not what you thought, or you just decide that a reverse mortgage isn't right for you, you have the right to rescind that loan, which means you can make that loan not exist. You just have to make sure that you follow the directions in your loan documents to the T. So if they tell you you have to fax it by a certain date, you have to do that. If you have to get it notarized, if you have to mail it, whatever those requirements are, make sure that you know what they are so you have that ability to rescind that loan. Because this is a lot of information. I could talk for hours about reverse mortgages. Your closing documents have a lot of information, and at closing, it's overwhelming. So make sure that you take that time at the end to review everything. Now, I want to talk about the third-party fees that would be paid typically at settlement. And those, again, are typical fees that you would have with anything, and that includes title search, it includes the appraisal, it can include the title search, it can include an inspection, all of those types of things that we would typically pay when we purchase or refinance are included when we take on a reverse mortgage. One thing that isn't typical with a traditional mortgage is if the reverse mortgage company is going to require that you make repairs. So it's not uncommon for individuals to take on a reverse mortgage because maybe they need to replace a roof. Well, when the inspection comes and when the appraisal happens, it'll be noted, and the reverse mortgage company will say, okay, we're going to make this loan to you, but you've got to make this repair. And they will stipulate that the money for those repairs be held at closing so that as soon as the work is done, that can be paid from those fees. So It's not uncommon for us to have to make those repairs. So I always like to include that when we talk about the fees that are typically paid from loan proceeds on a reverse mortgage. So we can use a reverse mortgage for lots of different things. It can help us with some of financial needs like being prepared for emergencies. Or maybe it's time to replace windows or make our property more handicapped accessible. It can also be used to pay for long-term in-home care because the reality is as we age, we want to age at home. I can't tell you how many people have no desire to go anywhere else but to stay home in their golden years. If they require extra assistance, proceeds from a reverse mortgage can help to make those things happen. The reality is that you can use money from your reverse mortgage for anything. There are no restrictions, but keep in mind that if you spend all of the equity that you have available to you in that first 2 to 3 years, what's going to happen in 10 years down the road when you have a legitimate expense that you don't have the resources to pay and you've used all of the equity in your reverse mortgage? So I always really like to emphasize the importance of being aware of that. We also want to think about how much longer we're going to be in the property. If I don't want to age in place in my home forever, maybe I only plan to be there for another couple of years. That's a lot of money. If you're looking at, $10,000 in closing costs, that's that's a big expense if you only plan to be in the property for another year or two. And then let's think about, are there other options? There are many nonprofits that offer assistance with making home repairs. There are some communities that offer options in order to help consumers to keep their home in, properly maintained. We also need to make sure, again, that we think about what our estate is expecting and have that conversation with them so that they know what your needs are and they know what to expect when they're trying to settle the estate. And then we also have to remember, and I haven't mentioned this, but taking on a reverse mortgage can and typically does impact your eligibility to qualify for certain government benefits like income-based insurance products. If you're getting a monthly payment from a reverse mortgage, that is considered unearned income when you're applying for certain federal benefits. So it's really important that you keep that in mind. Now, there are lots of different ways that you can use a reverse mortgage. If you don't need a monthly stipend, you may want to just keep a reverse mortgage available as a line of credit for when you need to access that. In those situations, the monthly payment or the unearned income doesn't come into play because it's an available line of credit that you don't always access. So make sure that you understand how it's going to impact your eligibility and make sure that you consider what type of option you choose when you're deciding on that reverse mortgage. So let's think about some other options that may be available. Maybe you qualify for assistance from other resources. Perhaps you qualify for SNAP benefits or LIHEAP, which is home energy assistance. Maybe you would qualify for assistance through your area agency on aging or or some federal options. If those are options that you want to take advantage of, that can be a way to make ends meet so that you don't need to have that reverse mortgage. Another option is maybe to downsize. If you're living in a 4-bedroom, 3-bathroom house and it's just you or you and your spouse, perhaps downsizing and getting into something that's smaller is a better option. You can also maybe take on a traditional line of credit or a traditional mortgage. The thing that you have to remember with those two options is that number one, you have to qualify with your credit score. A reverse mortgage looks at your payment history on your credit report. They want to make sure that you pay your bills. With a traditional mortgage or a line of credit, they're going to look at your credit score. And if you've got a lot of debt, your credit score can be impacted. So it's important to understand that traditional mortgage and that traditional line of credit your eligibility can be impacted by your credit score. Plus, with a line of credit or a traditional mortgage, you have to make payments. With a reverse mortgage, you don't have to make any payments until the end of the loan when you permanently vacate the property. But in either situation, you still have to make your payments for your taxes and your homeowner's insurance. So there's still things that you have to pay with a reverse mortgage. You just don't have to pay that regularly scheduled monthly payment to the mortgage. So it's important to understand that the older you are, the more money you may be able to utilize. So waiting a few years before you take on that reverse mortgage can be something that you might want to consider. The other thing is, if you're in your 70s now or your 80s, and when you get much older, you may not want to stay in that property because it's a lot to maintain. So you may not want to stay in the home. If you take out a reverse mortgage, use all the equity, and then decide to move, you may not have access to any funds after the sale of the property in order to help you relocate. And, if you use all of the equity when you're young, you may not have the money that you need later to make the property more accessible for you or to replace those, sudden expenses that we aren't planning on. Now, we do want to make sure that we avoid borrowing money to pay for other investments. There are no legitimate investments that are able to guarantee you that you will get a better rate of return than you would be paying for your reverse mortgage. So make sure that if someone's telling you, take out this reverse mortgage and then invest in this ant farm, that's not a good idea, because you're putting your home on the line in order to invest in something that isn't guaranteed. So that's a problem. Also, using a reverse mortgage to help others or to meet short-term needs is not necessarily a good idea either. Because again, you're putting the property that you plan to live in jeopardy of potentially not being able to keep it up, and that can put you in jeopardy of foreclosure. So the implications, the upfront costs make the loan more expensive. We kind of talked about that 2% and some of those other fees. If you use all the equity now, you probably won't have anything for those golden years. And as I said, it can impact your eligibility for Medicaid or other income-based financial programs. So make sure that you understand that and keep that in mind. I always encourage consumers that are considering a reverse mortgage to talk to their family. Talk to a social worker, talk to someone else that you trust, because there are programs out there that you may not think of in that sense of, I've got to do something. So make sure that you talk it out. I talked to one daughter who said, Katrina, my mom and I were talking about her getting this reverse mortgage because she needed just about $200 a month to, to be able to live comfortably. And the daughter said to me, Katrina, if she does that, I'm concerned that she's going to have this mortgage. She said, what if I just give my mom that money? And that's ultimately what she did. Instead of the mom taking on the reverse mortgage, the daughter was able to supplement the mom's income, and that's okay. So it's important that we talk to our family members so that they are aware of our financial situation so that they can help us to make some of those decisions. At the end of the day, when you permanently vacate the property or you pass away, the debt is owed in full. The contract typically stipulates you've got about 6 months to pay the mortgage off. Family members can choose to pay it off if they have access to a loan, or maybe there's life insurance involved. The family members can use money to pay off the mortgage. Again, remember that it's a non-recourse loan. So if you owe more money than the value of the property, your family has the ability to buy the property at the actual value, not what you owe. So that's important to understand. Your family members can also sell the property. If they sell it for more than you owe, they get to keep the proceeds. If the property isn't worth enough, then they sell the property for what it's worth, and the HUD insurance will step in and pay the difference so that your estate isn't responsible for any shortage. If your estate or family members are not able to sell the property within a timely fashion, the mortgage company can sell the property at auction. If they sell it for more than you owe, your estate gets any proceeds. If they sell it for less, again, HUD pays the difference. So that's really important to understand. But I have to remind you, if you don't maintain the home, keep it properly maintained. Make sure the roof stays good, the windows aren't leaking, you don't have, plumbing issues. You also have to keep insurance, and you have to pay your property taxes. Every time I've talked to a consumer who was facing foreclosure on a reverse mortgage, it's because they didn't do one of those things. So you have to do it. The reverse mortgage company is going to be checking to make sure that you are doing what you're supposed to do. Whoops. There we go. So if you are considering a reverse mortgage, you can call the 800 number that's here to find a reverse mortgage counselor in your area. Once you have your reverse mortgage counseling certificate, if you decide you want to move forward, you can go to HUD.gov to find a HUD approved lender that you may want to use. And then you can visit our website or call our office at 800 PA Banks, and we can help you to make sure that the company that you're working with is licensed in Pennsylvania. So those are the resources for this week. Again, if you have questions, comments, complaints, our staff are available to answer your questions during regular business hours. Their services and all of those calls are free. I want to thank you so much for your time and your patience as we went a little over on today's session. I hope that you found value and the information that we've gone over. And if you have questions, comments, you can email me at katrboyer@pa.gov, or you can call me at the 717 number listed on the screen. Thank you so much. I am going to stop our recording for this morning, and